everybody. Welcome to the Fundamental Analysis webinar here with AvaTrade. My name is Troy. I'll be presenting. As we get started, let's just do a quick systems check. If you're able to hear me clearly and you're seeing my screen all right, just type OK in the question box. Okay, great. Looks like we're up and running fine. If anyone has any issues as we go along, feel free to let me know. As always, keep in mind that there's risk with any trade that you take. No one trade is guaranteed to profit. So you want to manage risk in a way that makes sense for you while you go after those potential profits that each trade obviously has. And as we go over different ideas and concepts, keep in mind that what we're covering is not meant to be financial advisement, but is coming from an educational perspective. Now, as we get started, for anyone who's new to things, real quick, what is fundamental analysis before we get on the live charts? Basically, it's the news. Different types of news. It could be regular economic events that are scheduled with data releases that are coming out, and we certainly will take a look at some of those that are upcoming today. This type of fundamental news is a bit more targeted. We know what country it's coming from. We know exactly what the announcement is about. We know maybe which instruments might be more likely to have price movements based on those announcements, and so we can be pretty targeted and selective with that type of fundamental analysis. And then there's other types of more extraordinary type of news that can come in, or unexpected news that also can be part of fundamental analysis. And examples in the past were the global pandemic, a war breaking out in a certain region, etc. It's something that isn't necessarily scheduled or predictable, but certainly those types of news events also can move the markets, and sometimes specific instruments or assets are affected more than others, depending on what's going on. If something happens that affects global shipping, and maybe that affects shipping supplies for something like crude oil. And sometimes specifically certain events that happen around the world can largely affect a certain commodity or a certain instrument that you're trading on. And these are the sorts of things that we try to be aware of as we go in to trading on things. What's happening either scheduled or unscheduled around the world, and also as part of your risk management strategy, understanding that especially that type of extraordinary news could happen at any time. And so you want to risk manage trades. No matter how certain you are of a trade, you don't know when something uncertain might happen. And so and we have some nice risk management tools within our web trader and mobile app that can assist you with the risk management side of things as well. And if we go through some trade examples, we'll likely use some of those risk management tools in today's session. Now, as we go along, if you want to give any input or you have any questions, feel free to do so in the question chat box there at any time. Now, from our main website, we can log into the web trader. We also can find links for downloading our app. So feel free, or you can just search your app store. But you'll find here AvaTrade Go. And so everything we cover in the web trader in terms of trading tools is also in our mobile app, which is found in the major app stores. You can follow the link from here using your mobile device, or like I said, just search for it in the App Store. Now, if we log in here from the upper right corner, we'll be in the web trader, and there are a couple main areas that I like to use for fundamental analysis within our web trader and app. And a good place to start many times is the economic calendar, and we'll do so again today. So the economic calendar gives us scheduled events. We can rank them as to level of importance, and I should say they're already ranked to level of importance, high, medium, or low. Usually the higher level ones or the medium get good movement on the charts if the numbers come in any unexpected way, and you can filter that over here. I chose not to have the low level announcements show. If I click low, then those would show as well. And I can look at only medium, only high, however I want to set it up, and you can choose the countries announcements that you want to include. I've got the larger, more main economies included in the countries I've chosen. Now, let's look at events rather than the ones that already occurred. Let's look at upcoming events, which would be out of the US primarily today that have yet to come in. And there are some nice ones in terms of high level of importance as viewed by investors with data that's coming in. Certainly retail sales, the PPI data, the purchasing price index data, all of these are being looked at, initial jobless claims as well, as important insights as to how is the U.S. economy doing right now. And since the U.S. economy is the largest economy in the world, there's a lot of importance placed on these announcements from not just investors in the U.S., obviously, but all around the world. Now, the PPI data in particular, since it's inflationary data, okay, we're talking about prices, obviously, with this announcement, the expectation here is that inflation is not coming down. The expectation is to stay the same with a 0.3% increase in prices month over month. Okay, so prices still rising from last month to this month by 0.3%. The expectation is prices will rise as much as they did the last month, staying at a rate of 0.3% increase in the purchasing prices. So, the producers that have higher prices, then obviously, if that's the case, they're going to pass those expenses on to the consumers, and then that leads to CPI data, consumer pricing index maybe being higher as well, and we've seen that recently, that the CPI data was higher than expected, and rather than showing the predicted decrease in prices, the CPI data showed an increase, which spooked the market that day, and even the following day. So the producer price index is important in terms of inflationary insights. And so it's a huge focus in the US and all around the world, really, to try and bring inflation down. It was up above 10% before the interest rates were raised again and again and again and again and again and again, something like 10 or 11 times in the US to try and bring down inflation. It makes it harder for average Americans and average people around the world if your country is raising interest rates, because everything requires you to have money to buy, and if interest rates are higher, it costs more to borrow money. And so if you're using credit cards, if you're taking out loans, if you're trying to buy a house, if you're trying to buy a car, etc., or open a new business, all of these types of loans become more expensive and people can't afford them as much. And it's a necessary evil to cause that to happen, raising interest rates to try and bring inflation down, to stop people from buying and spending so much, which helps to drive up prices. So again, the hope here has been that the CPI data, the PPI data, etc., will start to show lower and lower inflationary numbers. Okay, here the expectation isn't even that it will go down, just they're hoping that it stays flat. And if you can imagine what might happen if this data comes in higher than expected. When everyone's hoping it will drop, if it comes in higher than expected, like the CPI data did recently, could spook the markets again, okay? And, higher than expected data here would lead people to think, well, they can't lower interest rates yet in the US if inflation is still rising. And so then that could cause potentially the USD to stay strong with the realization that, hey, they can't lower interest rates yet. Because lowering interest rates tends to weaken a currency and lead to more inflation, and raising interest rates tends to strengthen currency and bring inflation down. That's the general idea about it. So let's take a look from the past time that this announcement came in, over the past year or so. If this comes in higher than expected, lower than expected, or as expected, what are the movements expected to be on the chart then for USD currency pairings? What has happened in the past? So we use this tool here, which is the really powerful part of this economic calendar. The rest of it is plain. It's the same as any other economic calendar. But the powerful part of this economic calendar is the tool I just clicked on, okay? This stuff here allows you to see all of the data from these past announcements in terms of price movement, directionality, distance, timing, etc. So you can see based on past data what you might anticipate would happen moving forward based on how this announcement comes in. So we can say if this comes in above forecast, 80% of the time in the past, the USD strengthens. And we were just talking about that, right? The logic makes sense as well, along with the data, meaning if the price index numbers here are higher than expected, that creates fear that the interest rate can't be lowered so soon or so quickly. And so that could cause the USD to strengthen, knowing that, hey, interest rates would stay high in the US dollar, which makes the US dollar more expensive to get, right? It's the idea of higher interest rates. More expensive to borrow the currency, stronger value to the currency then. And so we see the reaction. And the one time out of these 5 times that the PPI data came in above expectation, the only time that it did not drop, look how it went up. You could barely see that green candle. So really, the whole time it went down or stayed flat. It really didn't go up any of these 5 times when these numbers came in above forecast. Okay, so based on the past, I think I sell if the PPI data comes in higher than expected, depending on my entry point, right? So we see after 4 hours, the range movement, almost all down, is over 46 pips. Okay, that's the true range movement. Now, in the first 5 minutes, it's already down, except one went up, but how far down? 21 pips in the first 5 minutes, 21, 22 pips, average range movement, most of it down. But in the first 5 minutes, average movement 21. After 4 hours, average movement almost 47. Okay, so it's not too late necessarily to take advantage of it. But you know, obviously, if I expect it to drop in the 4 hours, let's say, following the announcement, and in the first 5 minutes, it doesn't take 5 minutes to place a trade, by the way. So maybe in the first 1 minute, in the first 30 seconds, you're able to place a trade and get a better entry point than even 20 pips down. Maybe you get an entry point that spiked up, for example, or went down very little, and you can get in on that trade with the expectation that after 4 hours, in the past, it shows a lot more downward movement than up, 80% of the time, okay? And the one time it went up very little, so you wouldn't even need your stop loss very high. Small risk, larger potential profit, okay? Any questions on that? I'll pause for a moment. I'll leave it on the screen. And by the way, we can look at what about the opposite? What if it comes in below forecast? Look at that. Look how much green up compared to red down now. This is the type of data that gives me more confidence. You know, sometimes you look and you say, yeah, if it's above forecast, it dropped 80% of the time. And then you look and you say, if it's below forecast, it also dropped 75 or 80% of the time. So then it's almost like the announcement was meaningless. It dropped regardless, or went up regardless of how it came in. In this case, you get the exact opposite. If it came in above forecast, 80% of the time it dropped. If it comes in below forecast, 67% of the time it goes up. Okay? And the ones that went up were larger than the ones that went down for the most part. Okay? Again, 45 pip range movement, more up than down, 2/3 of the time. And after 5 minutes, only up around 15 pips. Whereas after 4 hours, 45 pip range movement. Okay? Again, technical advantage from the past based on how the announcement came in to trade in a certain direction. You just want to get the entry point that makes you feel comfortable then. Okay? Tobo, in AvaTrade Go, you go to the main menu and you'll see that there's a tool for the economic calendar. There's an option to choose the economic calendar. Okay? So Very powerful data, directionality, distance, percent chance from the past. Example. Okay, glad you found it. All right, so that's just one announcement. Now, I looked at the PPI data, right? If I look at retail sales, this is interesting. Now watch, retail sales. Above forecast, 67% of the time it drops. Below forecast, 67% of the time it drops. That's an example of what I was just talking about I don't like. Regardless of how this announcement comes in, the retail sales, 2/3 of the time it dropped. It's as if the retail sales are almost meaningless because no matter how it came in, the movement went the same direction. And it's not that it's meaningless, but you understand this announcement is at the exact same time as the PPI data. And obviously then the one that's determining direction more is the PPI data. It's a bigger focus of traders, apparently, right? Because depending on how this comes in, the direction of movement changes. Depending how the retail sales come in, it doesn't change. So the one that seems to be driving the directionality, since these announcements are at the same time, is the PPI data. Okay, this month-over-month PPI data that we looked at. The retail sales seem to be less of a determinant in terms of directionality. Okay, so when you get multiple announcements at the same time, you can weed out by looking at the data which one seems to be more significant than the other in terms of determining directionality. All right, and you can double up your standards. You can say, okay, PPI data, if it comes in high, Euro USD goes down. If it comes in low, Euro USD tends to go up. Retail sales, if it comes in high, 67% chance dropping. If it comes in below, 67% chance dropping, but a more pronounced drop compared to the alternate. So you may start to say you'll only trade if both of these come in a certain way. In this case, I think the focus is more on PPI from the data that I see, from how I interpret that data. I would focus on the PPI alone, maybe, and make my decision there. You also can consider the jobless claims, which are coming in at the same time, okay? The jobless claims, if we look above forecast, 75% chance it'll drop. Below forecast, 71% chance it'll drop. So there's a larger percent chance of dropping if it comes in above forecast. So I might say only if the PPI data comes in above forecast and the retail sales come in above forecast, since they both show a larger percent drop, then if they both come in above forecast, then I'll make my move to sell on Euro USD, because they both show a greater tendency for Euro USD to drop if they come in above forecast. Something like that where you can combine that. I'll only make the move if two of these tell me I should sell at the same time. And if they contradict each other, then I choose not to make the trade. That's an option as well. Obviously, you'll trade less often then, but maybe you'll have a higher percent win percentage, okay? Now, what else can we look at in terms of fundamental news? Another tool we have here is this news feed, okay? You click on the news feed, nothing to do with the economic calendar directly. The news feed interprets what's happened already. We'll talk about the PPI data that's coming up, what effect it might have. It summarizes things. It'll tell you about data that already came in. It's talking about what happened with Tesla and what happened with Apple. It's telling you numbers and then suggesting an instrument that might make sense to trade on from what they summarize here, okay? So if you don't want to sit and wait for announcements and trade on the announcements, you can also read the summaries and decide if this information gives you enough to decide to trade on one of the instruments that is related to that data, okay? There's data out of the US companies out of the UK, and so obviously these currency pairings make sense with that information that you might be interested in trading on it. So this is another tool that's in more of a summary format for you to find different instruments. Here's crude oil, click on it. Here's information about crude oil that's most recent. Okay, and then you could decide to buy or sell on crude oil based on that information. The information here doesn't always give me enough to make me decide what I want to do, but sometimes it does. And it's a nice summary and an easy way to find information in a short period of time. So this is another tool that's here, is this news feed. Okay. Then another option, and we'll take a look at this, under this discovery section, which is just below the news feed, the discovery section, which is where we found the economic calendar, we can also look at the market buzz. And we can look at any instrument that we offer in the market buzz. And the idea of the market buzz is it's finding things that are buzzing online, that have a lot of buzz around them, or a lot of talk online, and it finds the links and stories and generates them for you to be able to click on and look at, to see what's going on. Why is NVIDIA buzzing so much? Why is it one of the bigger circles here? Because it has more talk and information online circulating right now than the smaller ones. So maybe I say, okay, NVIDIA, I've heard it's in the news a lot. They've been doing well with AI, etc. They've really captured a strong share of that market. And so let's see what's going on with NVIDIA. Prediction here, price may rise 27.9%. That's not a small prediction. That's a huge number. If we're looking at stocks, we're not talking about a cryptocurrency here where it's kind of par for the course with cryptocurrencies, that they can rise 27% in a short period of time and pull back, and the high volatility that you can get in large movements with something like cryptocurrencies. But you tend not to see this type of prediction for a blue chip stock like NVIDIA. But that's what we see, 27.9% price may rise. Okay, if you want to see, well, what are they talking about? Click on that. It gives you a breakdown of the support and resistance levels. It shows you where the take profit levels suggestions could be. We're talking well above 1,000 a share now. They're looking at that this price could go to. This is the type of momentum that NVIDIA has had. Okay, so that's the technical trend analysis. Now, what's the news behind that? We can start to read. Okay, it says NVIDIA conference could trigger rally in AI coins. Okay, NVIDIA has a conference. That's good to know. We could click the link. Story, there's a summary of it here. Okay, we could also click the link and see what are they talking about. Sounds like they're talking about NVIDIA triggering a rally in cryptocurrency coins that are related to artificial intelligence. Okay, so here I was wanting to learn about NVIDIA, and I'm finding out not just about NVIDIA, but maybe about how it could affect cryptocurrencies. And so this is a way that you can find the stories by clicking on the links. You can read the whole story and see what is it that they're talking about. Okay, and you can get a variety of sources. We can scroll down and find out other ideas about the same instrument that maybe contradict each other even. NVIDIA stock still isn't expensive at $2 trillion valuation. So again, this supports the idea that it could rise more. NVIDIA stock still isn't expensive, even though it's almost 1,000 a share. The Bank of America is saying they don't think it's even expensive yet. Even though NVIDIA now has a $2 trillion valuation, there are experts out there, leaders in finance, that believe that no, its price is not too expensive yet. So, and you can click the link. You can read all about who said that, read the whole article, and see why they think that. Okay, so very easy to find information right there at your fingertips that can help you decide whether you trust maybe a technical signal like this. Price may rise 27.9%. Okay, but why? Not just because it's on such a great technical trend, but I'd like to know the fundamentals behind it, and you can start to see articles that maybe support that or not in your mind. And then you make an informed decision. Do you want to try and follow this signal or not? Okay, and the fundamental news helps you to do that. But you'll also find articles that contradict. Like this one here, NVIDIA shares pose warning to investors ahead of key AI conference. So here's another article about that same conference. The prior article said, hey, it's helping to pull up other instruments as well, like cryptocurrencies. This one is saying that you might have some caution. It's saying, there's a warning here. And I read this article a bit already. If you read this article, basically they're saying NVIDIA is being shorted right now by investors, meaning they anticipate that the price could drop. They're trying to make money by shorting it more than any other company right now. You start to read, Tesla had some issues and there were a lot of people shorting Tesla. They're saying there are more shorts on NVIDIA out there, whether it's in hedge funds or on Wall Street, etc., than most any other stock. Okay, and so NVIDIA shares are the third most shorted stock on the market according to recent data. So not the number one shorted, but the third most shorted. Okay, 18.3 billion in bets against it. The two that have a little bit higher than that are Microsoft and Tesla, maybe. No, it exceeds Tesla. This is what it says here. The two that have more shorts are Apple and Microsoft. More people thinking the price will drop, or more investment thinking it will drop. But NVIDIA is being shorted more than Tesla, but not quite as much as these other two, but close to being number one. So you can start to read about that and see, okay, some people have a contradictory opinion as to this signal. Okay, there are folks out there that are thinking it's wise to put money in the opposite direction. So, eventually there's a pullback with every rise. The timing is what you want to get right. And so in the short term, it looks like there's momentum up. That's what the signal says, and that's what some of the articles kind of make you think could happen as well. But that's why you read a variety of articles, because this article lets you know as much momentum as there is up right now, and yes, it could keep rising, there are those out there that are trying to short it right now. And eventually, if you have enough people trying to short it, it could pull the price down with a pullback. So that's why you risk manage, right? That's why if you set up a trade, you put a stop loss or a hedge position to help cover risk, because there are competing interests out there on each instrument that are trying to trade in either direction. Okay, so this is a really useful tool, and we can look at any instrument we want really and get an idea of what's the most recent news and articles that we can find out there on it. Whether it's Goldman Sachs with 46 mentions or Tesla with 505 mentions, the information can be very good. Okay, Martin, this webinar is recorded, as are all of our webinars, and you'll find it on our YouTube channel in the English webinar section, and you can watch it at your own leisure, as well as the past webinars and also future webinars. They'll be recorded and uploaded there as well. This webinar I do is repetitive in terms of day and time each week. Okay, you'll find it on Thursdays, the live session each week. Next week I have to take off, but the next Thursday it'll be back at the normal day and time, and the same with my Tuesday evening webinar, where we focus more on technical analysis. They're also recorded and uploaded. Okay, so we can take a look and say, all right, cryptocurrencies, they say, are being affected and gaining momentum with this whole AI tech rally, etc. So maybe we want to look at, for those of you that are able to trade on cryptocurrencies, a diversified index of cryptocurrencies like the Crypto 10. Okay, the top 10 traded by volume cryptocurrencies as an index. And we can take a look. 5-minute charts show a pullback. But if we start to look at larger candles, like one-day candles, okay, look at that climb on the Crypto 10 index. I mean, it's a huge rise in cryptocurrencies. It almost mirrors the rise of NVIDIA and some other stocks, and for that matter, gold as well against the US dollar. So We see a lot of investment, a lot of momentum in these different instruments, and the key to know whether to keep riding that momentum up in this case or to follow ideas about a sell-off and a pullback is to pay attention to the fundamental news. Okay, the fundamental news, you would understand why Bitcoin in particular and other cryptocurrencies went up so rapidly if you paid attention to the fundamentals, right? You know, the US approved spot ETFs for Bitcoin to be traded on in real hedge funds, on the legitimate markets. It legitimized Bitcoin investment with these spot ETFs being approved in the US. And we saw a huge surge leading up to those ETFs being approved because it was anticipated that they would be, and even more of a continued surge after. So the fundamentals support why this was climbing, okay? So if you have the fundamental news on your side, then it's easier to do the technical analysis and trade with the trend, if the trend is in the direction of the fundamental news. And so it was easy for investors in cryptocurrencies, for example, to keep buying on these even as it kept rising and not feel like it had to pull back right away, okay? So the same could be true as we look at NVIDIA. We understand the fundamentals, why it was rising, the big push for AI technology and the fact that NVIDIA cornered the market first and got a huge segment of that market and still does. That's the fundamentals why NVIDIA keeps rising. That's a large part of it. So if you understand the fundamentals, then you can understand the technical signal that the price could rise 27% more, or whatever that number was that we looked at in the trend analysis. Just take into account that certain instruments, like we saw there in that article, NVIDIA, a lot of hedge funds and others out there are starting to short NVIDIA, meaning there's more and more money betting on a pullback now. So you keep that in mind as you trade with the fundamentals, understand the timing of it, and then eventually every large run has a pullback, okay? But more times than not, if you have the fundamentals on your side and you trade with good timing on the technicals, you can come out on top. Just manage the risk on the downside in case that big pullback, for example, happens while you're in a trade. So then you protect yourself with your stop loss or with AvaProtect if you're trading on gold or silver or FX pairings, etc. Okay, so any questions on what we've talked about in terms of taking into account the fundamental news, using the market buzz as a way to find recent news on any instrument, or using the economic calendar as a way to find really up to the second announcement data to trade on data-driven trading, which uses the past announcements to compile data and probabilities of what you might want to do moving forward. Any questions on anything we covered? Hey, Martin, my name is Troy. I see, I'm glad you're enjoying the presentation. My name is Troy. I'm a senior account manager with AvaTrade. Okay, I don't see any more questions popping up. I don't want to carry on just for the sake of carrying on. I know we have some large announcements coming out of the US very soon in the coming hours. So I'll give you time to prepare for those if you're going to trade using the economic calendar, maybe that we looked at here. These announcements are upcoming, and they are high-level announcements. And remember, they're right here, and that we focused. The data looked strongest in terms of predictability from the past announcements on the PPI data month over month. That was the one that gave us this probability of, if it comes in above forecast, 80% drop in the past, 80% of the time the moves went down, and if it comes in below forecast, 67% of the time it went up. Okay, so pretty convincing data there that if you can get the entry point you like, maybe you make a move based on how the data comes in. Okay, all right, everybody, thanks for joining. Till next time, good luck with your trading.